The broadcast is now starting. All attendees are in
Hello, good
listen-only
evening
mode.
to everyone. I will check if the audio is okay. Hola, hola. Hola, hola. Yeah, it's working okay, the audio? I have some doubts. Okay, perfect. I have a lot of people now confirming. Juan, Dan, thank you. Christian, okay, thank you. We have Bill from California. Welcome, Bill. If you can just tell me where are you from, it's perfect. It's nice to see. From which part of the globe are you joining to this webinar? Denmark, nice. Fine. Wow, a lot of people just texting. That's nice. So you know now that you have a chat box where you can send messages, you can make questions during the webinar. Everything that you need, just drop the message there. I will read it. Okay. Alejandro is saying that it's working okay. We have people from Slovakia, Ondrej. Welcome from Switzerland, Alejandro Aguilar. I think you are from South America or Spain, Alejandro. Istanbul, Sinan, welcome Istanbul. UK, Richard. Toronto, Canada. Well, we are from everywhere in the world. India, very nice. Volume is too low, it's saying Phil. Just let me know. I have this at the maximum now. Yeah, it's at maximum. If you cannot hear well, just let me know. Should be okay, based on what I can see. Singapore, Samyak, hello Singapore. And from Argentina, Agustin, they say that the audio is perfect. Okay, many messages. India, Marco from Amsterdam. Okay, Marco, I'm in Amsterdam also. Okay, nice to have someone very close from where we are. Romania, Mircea, Spain, Libardo, Glaston, UK. Perfect. Yeah, I will speak slowly because my English is my pronunciation is not the best, so I will try to speak slowly and clear. If not, please just stop me, let me know, and I will say it again. Iran, Ali, India. Okay, a lot of people. Volume fine. Mumbai, Sirai. Okay, nice, very nice. Thank you for joining. Johannesburg also. Okay, and Kid, I will try to pronounce as the best as I can. Yeah, so, and yeah, try to get a good audio from your side also. Okay, perfect. Good. I will share. Can you see the screen? You should be seeing in the screen. So let me just put the website. You should be seeing a website now. You're welcome, Ankit. Yeah, perfect. So that's the financial forecast website. Perfect. So I will share the camera so you can put a face to this voice that is speaking from the other side. We have already questions in the ABC wave structure. Is it okay to use B and C on the same candle bar? It depends on the time frame, but we will go through it, Richard. It's not totally correct because, and one of the objectives of this webinar is just to demystify all the things related to Elliott waves. Elliott waves is not only about length. Elliott wave is also about time. Or not Elliott wave, the fractals of the financial markets that at the beginning were defined by Elliott are connected by time also. But that is the most difficult part of the fractal structure. And we will go into details during the webinar. Do you arrange for the market crash right now to explain the wave 3? Okay, we will define what is a wave 3, Rosbeth, but you will see during this webinar that wave 3 doesn't used to happen so often. Okay, so something we will show during this webinar. Okay, I will answer all the questions. Don't worry. If I don't have time during this webinar to answer all the questions, you can always send me an email with a question. I will answer. Yeah, I will solve your doubts. Okay, that is no problem for that. The duration of the webinar, Ankit is asking, will be around 1 hour 30, 2 hours. Yeah, but the webinar is being recorded. So tomorrow you will have the recorded webinar on our website. Yes, in thefinancialforecast.com, in the blog. Yeah, you click on blog, and then you will have at the beginning this webinar recorded. Okay, so you will find this tomorrow morning European time. Okay, so everything that you cannot see today, you can see it tomorrow. Yeah, if you have questions that cannot be solved during the webinar because time, then you need to send me an email. Where to send the emails? Let's go to the end of the PDF. Emails, info@thefinancialforecast.com. Everything that we cannot solve today, or you have doubts, you have specific questions, and you want to share your analysis with me, that's fine. I would love to, if you're doing that, send me everything to info@thefinancialforecast.com, and I will try to help you and give you support as much as I can. Okay? These two things before we start, because always they will drop the question regarding where you can contact. Okay? Perfect. Good. Let's go up again. Another thing, if you want the PDF version of the presentation we will share today, just drop me an email, the same, info@thefinancialforecast.com, and I will send you the PDF for the webinar today. There you have samples, you have images, everything we will see today, you have it there. Okay? Please inform the email. Kabir, you have it in the screen. The email is this one, info@thefinancialforecast.com. Yeah, no, don't worry, Kabir, it's fine. That used to happen. So let's go to the beginning. Okay, let's go to start officially with the webinar. Okay, a lot of people there. So I have two screens. So most of the time I will be looking to the, in this case, the left side. It's my right side. Yeah, just to see in the screen. And on the right side, I have all the questions just dropping. Okay. Good. So let's go to start with the webinar. Everything is okay. Sharing. Muy bien. Okay, let's go to start then. All the graphics and the analysis system that we will see also in this webinar, you can find the forecast for free in this tab, free forecast, in the website. Okay, that is good because that you can compare your analysis with what we have in the website. Yeah, and it's totally for free. So you click on free forecast, you subscribe to the free forecast, and you have a total of 5 instruments, 3 time frames, monthly, weekly, daily, plus a dashboard that I will explain later how to read it. If not, you always have the videos to see how to read the charts and how to read the dashboards. Okay, perfect. So let's go to start. What is the idea of the webinar today? What we will see during all this hour and a half, maybe we will be close to 2 hours. First, we will do a quick introduction about what is the financial forecast and me. Then we will move to define what are fractals, because the first step is define the object that we are studying. Yeah, and the financial markets are fractals. So we will define what a fractal is. And what Elliott did in 1930 was define this fractal without knowing what was the concept of fractal, because that concept appears in 1970 with the hand of Benoit Mandelbrot, yeah, a mathematician, French mathematician. But already at the beginning of 20th century, and Elliott, they defined different kind of fractals that we will just review today. Then we will move to Elliott Waves. We need to understand the basic of Elliott Waves. With all the knowledge that I will share today, you are able to analyze any kind of instrument in the financial market. So we will start with general concept, then the model of 5 waves, then the different kind of waves, yeah, the motor waves and the corrective waves. we will analyze some questions that we have there, the ABC structure, and if we can, how to level that, that's fine, it's easy, and we will review that. Then we will go to the math rules. That is really an important discovery from Elliott, because here we can connect in length, only in length, and we will see the different kind of waves or the segments that we will have within this fractal. Okay, and then we will move to what is really happening in the financial market. We will see the true structure in the financial market. It's not what Elliott was saying. Yes, he was very close, and we will understand from a fractal point of view, more modern approach, how the market behaves and what are the rules that you can apply from the Elliott Wave principle. Then we will see some patterns, how to analyze the market, because something has happened is sometimes is funny to see. When you go to different websites or you look for a chart with Elliott Wave analysis, when the pattern is complete, it's very easy to label, and that label is correct and makes a lot of sense. But that is not the reality of you doing investments. When you need to invest and you need to make a decision, the pattern is incomplete. Yes, and the different alternatives that you have in accounting and all the subjectivity around Elliott waves can be quite tricky, and you can have different kind of countings. So we will see how to count properly. Okay, that's why we need to learn to analyze incomplete patterns, to being able to make decisions, right decisions for investing in financial markets. And then with all this knowledge that you will learn today, I will show you the artificial intelligence that we developed in the financial forecast, applying some of these rules, not all, some of these rules, and what is the result that you can have. Okay, so this proof that what we will see today is applicable and you can apply this in a profitable way. Okay, any question that you have during the webinar, just drop it in the chat box. Okay, let's go. I will put this figure. Okay, what is the financial forecast? Financial forecast born 2 years ago with a clear idea, just offer support and education to all of those that they want to invest in financial markets. And plus that, not only we offer education, we develop tools, yes, in order to make that investment easier for those that want to invest. Okay, within these tools, we have artificial intelligence, and you can see in the graphic what is the performance of this artificial intelligence that we call the bumblebee. Yeah, and this works with some of the rules that we will see today. Okay, and everything is moving. All our tools, all our education is moving around a backbone. This backbone are these 5 points that we have on the right side of the screen. They have a question from Maximo. Can you use it in options? Yes, you can use it in options. You can analyze with everything we will see today. You can analyze the instrument, but in options, you need to keep in mind that there is another factor that is quite critical. That is the time, and it's the expiration of the option. Yeah, and that makes the option much more complicated. Yeah, investment instrument. It's not easier. It's more complex. Yeah. But you can apply everything there. So we say that financial markets are the manifestation of economic activity. Yeah, if we want economic activity, we need just people intervening on it. Yeah, need to be an interaction between these people. That interaction that arises between these people, what created different feelings of what we call the social mood. Okay, this social mood are the emotions share, but that mass of people intervening in that market, that situation. In this case, we are always talking about financial markets. And those emotions that are shared for all the group, fluctuates in a fractal pattern. And that's something that we can see reflected in the financial market. And especially now, it's very easy to see with everything happening around COVID and how the sentiment, that sentiment from negativism to optimism is shared by the mass of the investors. Yeah, that's why we can have this strong movement to the downside. And when you ask and when you see media, yeah, we have in the blog some research done regarding that, you can see how all that emotion is shared with most of the investors around. Yeah. Okay, I am Matias Menendez. I have a degree, a master degree in financial markets and asset management. I've been in this market for a long time, almost 20 years already. I've been participating. I am specialized in Elliott Wave, Elliott Waves, Elliott Wave principle. I've been working with a very important company online that support and give all this kind of analysis. I was for the Spanish side, now working for many years. And then I decided to step aside and start this new project with the financial forecast. In the meantime, I wrote a book. Most of the content that we will see today is in that book. It's called Las ondas de Elliott, el comportamiento fractal de los mercados financieros. The book is only in Spanish at this moment. I hope soon we will have it in English. But if you are a Spanish speaker, you can find the book in Amazon, Casa del Libro, Corte Inglés, or in the publisher website that is Editorial Profit. Okay, everything is on the website if you want to check it. And I developed different algorithms. One of those is the DMFM, the Dynamic Multi Fractal Model, that explain and help us to analyze and to create the different patterns in the financial markets. Okay, so that's me, and let's go to start first with the fractals. What are the fractals? Do you know more or less? Because it's a word that we always have in our minds. Is the sound of this word is very familiar. This concept is more used, and when we talk about fractals, we need to think about two main characteristics of fractals. One is the self-similarity, okay, something that always look as the same, and then we have the fractal dimension. But they are like mathematical models that can explain natural phenomena. For example, on one side, or we can talk about a simple structure that is repeated infinite times to create bigger and bigger structures that look like as the same. So it will be like the concept, the easy concept of a fractal. Yeah, something that is self-similar and has a fractal dimension. Okay, and the image that we can see here is the von Koch curve. Yeah, and this is a snowflake, what we know as a snowflake, and it's a very known fractal. We have many of these. We have, for example, the Cantor set is another nice fractal to study. But with this, it's okay to understand the process and the self-similarity. So if we see this portion is repeated all the time in the snowflakes, and doesn't matter if we zoom in or zoom out of this image, we will always see the same or something very similar. And this snowflake structure is built very easily. Start with a line, and you have what is called an iteration. So we remove the middle part, and in the middle point we add two lines. So in total we have the L, that is the segments, divided the segment which the line is divided, and then how many of these segments cover this space of 3. So we have 4. That is the first iteration. Okay, we repeat that process with every line. We do the same. So we divide it in 3. We remove the middle piece. We add 2 lines that connect in the middle point in every line, and then we have the iteration. And we can repeat again infinite times with smaller lines, smaller lines, smaller lines. But doesn't matter where we observe the fractal, the scale, we will always see the same. Okay? Do you find this familiar with financial markets, with the instrument that you use to analyze? So that is the first question I just dropped there. You can answer that question, yes or no. You can be honest. I will say yes. I find this quite familiar, and that was the first impression when I saw a chart of, for example, Forex, and you know that something is very similar there. Something is happening. And then we talk about fractal dimension. Okay, what is a fractal dimension? One of these is not observed. You will see after the webinar, I hope, and it's an exercise that you will see all the time. Something very, very similar. Fractal dimension, if we think about dimensions, we have three known dimensions. Dimension 1, that is line. Dimension 2, that is the surface. Dimension, sorry. So we have dimension 1, that is line. Dimension 2, we have the square. Yeah, and dimension 3, we have the cube. Okay. So we have these three dimensions. What happened with the fractal? The fractals are not situated in any of these dimensions. They are in between. Okay. That means that the financial markets, for example, this structure is not aligned, but doesn't occupy all the surface of this square. Yeah, it's in between these two. It's in between 1 and in between 2. And that's what Mandelbrot discovered, okay, with his researches. The dimension in this case of the Monkoch curve is 1.26. Cover something more than a line, but not enough to cover the full surface of the square. Okay, is that clear? Self-similarity, and you can only see the face. You should be seeing the screen also. Payman, can you see the screen? Okay, Maximo is seeing the screen. Okay, perfect. I was a little scared. Okay, everybody see the screen and the face also. Okay, good. Thank you for the confirmation. I was a little scared. Okay, so we have these two concepts. Important to understand this. Yeah, so we can move forward. Self-similarity, fractal dimension. Thank you. All the confirmation, Neil, Emmanuel, Susanta. Okay, perfect. So let's move forward. These are fractals. What happened then with the financial markets? I got different pictures of different instruments and different time frames. Are you able to tell me to which instrument and which time frame belongs each of those? I think it's practically impossible to define and say, okay, this is a euro, this is a pound, this is a Dow Jones. If you can just try to find out which is which and the scale, it's quite difficult. And all of them look more or less the same. And we can connect. We can say that these two are very similar. Maybe it's the same instrument in different time frame. So we have this. It's quite difficult. Yeah, but we always see movements, upward movements and downward movements. Yeah, in some cases, it moves in an horizontal way. But we always see something very chaotic, no? Like electrocardiogram. It's moving all the time, up, down. Okay? So it's very similar. And that self-similarity makes very difficult to identify each instrument in this case. That is here. We have the pound, we have the euro, Apple, the crude oil, the Bitcoin. the Standard & Poor in different time frames and they look similar, they behave in a similar way. Okay, so then we can say that there is some self-similarity in the financial market. Okay, but we have more, because fractals cannot be only in the image, in the lines, what we see self-similar. We have a statistic part of the financial markets that behave in a similar way, and that is also a fractal. And then when we move here, so this is part of the dashboard we have in the website. Okay, and here we show basic statistic from these instruments, different time frames, and we show the spectrum. The spectrum is the fluctuation, how this instrument is behaving in their movements. And we can see something very interesting here. All the instruments, doesn't matter the time frame, tend to the mean be zero. Okay, tend to balance to each other. The movements always tend to balance. We have movement up, down, we have displacement, but here I'm not talking about that. Here I'm talking about how it behaves, and always tend to balance and tends to be in an equilibrium. Okay, something we can see in the mean, but also we can see this in the spectrum. If you see, there is a practically perfect symmetry between the different movements, yeah, positive and negative movements. That's why we have this symmetry. Doesn't matter the instrument, just they have this symmetry and they present this. Okay, it's another fractal characteristic of financial market. Okay, so we have self-similarity in the appearance when we see it, and we have a statistical self-similarity. Okay, so we have the first one checked. We need to see if we have fractal dimension, because if we don't have that fractal dimension, then we cannot say that financial markets are fractals. And then we move here. We can do a study. I ran a study, and you can find this study in the book. And we calculate the fractal dimension of different instruments using the rescaled range method. Okay, to define the Hurst exponent. Yeah, it's something complex. If you want to know more about it, just send me an email and I will send you links and information. If you're a Spanish speaker, you can get the book and you will find it there. But we needed to define the dimension of financial markets. And we use the Hurst exponent to get the fractal dimension. It's 1.38 for the euro, 1.30 for the pound, 1.36 for the dollar yen, for example. And the Hurst exponent is always above 0.5, 0.7, 0.62, 0.64. This is telling us that there is a trend. Yes, this number is telling us that there is persistence, and the past movements are influencing or will influence the future movement. Okay, that's why we have trends in the financial market. That's why we can invest in financial markets, because they are not random. They are developed trends. Yes, and this is getting from this study. Okay, so we have self-similarity and we have fractal dimension. So we can say then that the financial markets are fractals. And who was the first person talking about the financial market as a fractal? And that's when we enter in the Elliott Wave principle. Okay, any question until here? We will catch up again with fractals when we see how really the financial market behaves. Okay, no question here? Cool, if not, just drop the questions, okay? Good. Let's go to Elliott Wave principle. What Elliott was said in his study, he made a deep study of the Dow Jones instrument. He was really a fan of the Dow theory, and he deep dived in all the study of the Dow Jones, and he discovered that the market moves in 5 waves. That's what he saw. Okay, we're talking about 1930. Okay, and he only based his study in the Dow Jones. Okay, so let's see. Okay, the market moves in 5 waves. The 5 waves show progress. Okay, And we can see these 5 waves in any kind of financial instruments. Okay, so we can see in this graphic here, that is a USCAD in the monthly time frame, we can see, or we can identify 5 waves. Okay, and what are the waves? Are those segments? Yeah, are these segments between a significant minimum and significant maximum. Okay, very important this. We need a minimum and we need a maximum. In between, during that journey, we can see a lot of vibration, different kind of internal structure. Yeah, but this is a wave. Minimum, maximum. We identify another minimum, we have here maximum, minimum, maximum. Okay, so we have waves here. 1, 2, 3, 4, 5 waves. Perfect. We identify here another maximum, another wave. We identify here another minimum, another wave. Okay, those are waves. And based on Elliott, we move, the market moves in 5 waves. So then we say that the market moves and 5 waves. Of those, 3 move in the direction of the trend, that are 1, 3, and 5, and 2 move in the opposite direction of the trend, that are 2 and 4. These are corrections. Yeah, 1, 2, 3, 4, 5. Very easy. And if we apply this concept to the prior chart, so we can define and we can label the complete pattern as 1, 2, 3, 4, 5. Okay, very easy. But for this happening, we need to follow some rules. It's not so easy. It's not where we identify 5 waves and that is a 5. This need to happen. 4 rules that cannot be broken. Okay. The first one, the wave 2, must not exceed the start of wave A. Okay, wave 1. Wave 1 start here, and wave 2 finish here. That first rule is fulfilled. It's okay. This can be 1 and this can be 2. Perfect. Wave 3 is never the shortest of the waves 1, 3, and 5, the one that they are moving in the same direction of the trend. We can know this only when the pattern is complete, or the first wave is too short and the third wave is longest. Okay, but in this case, as we have the complete pattern, wave 3 is highest, is larger, longer, than wave 5, but not wave 1. Okay, but the wave 3 in this case is not the shortest wave of the 3 motor waves. Perfect, we have 2. Rule number 3, wave 4 never enters the territory of wave 1. This we'll call overlap. So the territory of wave 1, starts here, up. Yeah, this should be a straight line. This is the territory of wave 1. And wave 4 is very close to enter, but it doesn't enter. So it's okay. We have this rule also checked. And the last one, the wave 2 never is a triangle. Super important this. Yeah, and not everybody applied this rule. Wave 2 is never a triangle. And if we see the internal structure of the wave 2, it doesn't have a shape of a triangle. It has a shape of a zigzag. Okay, so we have the 4 rules applied. So this counting is correct. Okay, perfect. This is very easy. The rules are very easy, straightforward. There is no complexity really on it. So perfectly fine. We can move forward. So within this schema, we have 3 waves that move in the direction of the trend and 2 waves that move in the opposite direction of the trend. Those are correctives. And we define then 1, 2, 3 as motor waves. Sorry, 1, 3, and 5 as motor waves, and 2 and 4 as correctives. Okay, important this. motor because they move in the same direction of the market, they drive the market, okay? And 2 and 4, they retrace the advance happened before. But then what happened with the corrective? And here is where we have the most different kind of structures, yeah, within the corrective sequence. The corrective waves, they move in 3 waves instead of 5. And that's why Elliott used this 5-3 all the time. 5 show us progress, 3 show us a correction, okay? And 5 is a higher number than 3, so this allows to the market just grow. And one point of view is, yeah, it makes sense, but it's not 100% true. We will see further that we don't need 5 waves to see advance. Yeah, we can also see advance with 3. Yeah, but in this case, to understand the principle, we need 5 and 3. And all the corrective waves are divided in 3 waves, okay? A, B, and C. So motor waves, this schema of 5 is labeled as with numbers 1, 2, 3, 4, 5, and the corrections with letters A, B, and C. Okay? Very easy. So we have 5, we have 3. 1, 2, 3, 4, 5, A, B, C. So that means, as we are talking about the fractal, and we said before that if we zoom in or zoom out, we will see all the time the same. So let's go to zoom in from the prior image. If we zoom in the wave 1, yeah, we see just a line, and we zoom in, and we see the detail. So what we will see is again a schema of 5, yeah, as we see here, 1, 2, 3, 4, 5. And if we go more into the detail, all the waves that are motor waves or motif waves, 1, 3, and 5, they are subdivided into 5 waves. But 2 and 4 are subdivided again into 3. Okay? 5, 5, 3, 5, 3, 5. Yes, if we put labels to this, is 1, 2, 3, 4, 5. This makes 1, ABC, 2, 1, 2, 3, 4, 5, 3, ABC, 4, 1, 2, 3, 4, 5, and we have 5. So here we differentiate with how we label, yes, if it's caps or not, the degree of the wave. Larger degree, yes, bigger or smaller. Okay, that's why we have here the 1 and the 2. Okay, with these numbers, with Arabic numbers, and then we have the Roman number for lower scales. Yeah, but very simple. Yeah, every time if I ask you now, okay, and this wave is subdivided into, how many of you know? Okay, so let me go down because I'm not seeing 5, maximum saying 5, exactly. So there are 5. Okay, I will give all the example of triangle CERN. So we will see the further. Okay, the rule of 3. Explain rule 3 again. Okay, the rule 3. Sorry, Mangesh, I didn't see the question before. We will go back. We'll see triangles later. Maximo, Paiman, and Nahib, perfect 5. Good. We understand this. And if we go here, how many ways do we have? I will explain the rules again. Yeah. Many people are asking for the rules. CERN 3, so you study Elliott Wave 3. And now, in how many internal waves is divided this wave? 5. Okay, 5, 5, 5. Olga, Kabir, 3. No, it's 5. Maximum saying 3. No, there are 5 waves. Paiman is okay. Maniok, no, you will have 5 waves, internal 5 waves in this. 5, Jose, muy bien. So, yeah, it's a 50-50, eh? Okay, this is divided into 5 waves. We will see that later. So let's go to review the rules again, because many of you were asking for the rules. 4 simple rules. First rule, wave 2 must not exceed the start of wave 1. Why? So I will draw it here. We have the first movement to the upward movement. Okay, I will do it nicely because it's not so nice. So we have the first movement, and what happens if we have this? So this movement, this wave, exceeds the minimum of the wave 1. Okay, the start of the wave 1. So we cannot say that this is 1 and this is 2. Yeah, this is totally wrong. That cannot happen. Yeah, that is a rule 1. To be correct, we need to have 1, 2. Okay, 1 and 2. Yeah, easy. Rule number 2, wave 3 never is the shortest of all the waves, and this can be explained with an easy rule. We have wave 1, we have wave 2, we have wave 3, we have wave 4, we have wave 5. Okay, if I say this is 1, this is 2, this is 3, this is 4, and this is 5, this is totally incorrect. Yeah, because we are breaking the rule number 2 and the rule number 3. We are breaking 2 rules. So this is not possible. Okay, wave 3 is the shortest of all the waves. 1 is longer than 3, and 5 is longer than 3. So this cannot be a wave 3. And in this case, 4 enters in the territory of wave 1. Yeah, we have here the maximum, and this is the end of the wave 4. So this cannot be wave 4. In this case, the label is incorrect. What is the right label? If some of you knows, just drop it there. What is the right label for this schema? I will draw it again. And if you don't know how to label this, it's because you understand these 4 rules. We have 1. Marco is saying, Marco, good, this is 1. Daisy is wave, this is 1. This is wave 2, exactly. Corrective, very good. Nahib, wave 2. And this, we have this, and we have this. This is not wave 3, because we are breaking the rule number 2. So what happened, this is the internal structure of a larger degree wave. Yeah, remember that all the time we see, based on Elliott, 5, 3, 5, 3, 5, 3, 5, 3. So if we are in the third position, and this potentially can be a wave 3, then the internal structure, what we are saying, or the possible labels are 1, but lower scale, 2, this is Romance, lower scale, and this can be the wave 3 of lower scale. How we complete this pattern? Ideally, we should have wave 4, 5, 4, and 5. So we have wave 4, we have wave 5. These 5 waves, 1, 2, 3, 4, 5, complete what is a wave 3. Yeah. Then we have wave 4, and then we have wave 5. Okay. If you don't understand this now, no worries. We will understand later. Yeah. But these are the basic rules. With these 4 rules, you will be able to label. Okay. And always analyze this point from rule to rule, 1, 2, 3, 4, and you need to fulfill all of these in order to label the pattern. Okay. Can wave 5 be shorter than wave 3? Of course, wave 5 can be the shortest of all the waves. Yeah. Rodrigo is asking for the rule number 4. Okay, and the rule number 4, for example, wave 2 can never be a triangle. So if we have 1, 1, 2, 3, 4, 5. Sorry, this. So we can say 1, 2, 3, 4, 5, and this is a common mistake. Okay, so what is wrong here? What is the rule we are breaking? Rule number 4. Okay, because wave 2 is a triangle. The triangle we see the further has 5 waves. 1, 2, 3, 4, 5. Okay, has a contracting mainly structure, and then we have movement upward. So that means that this cannot be wave 2 because it's a triangle. Okay, so this label is wrong, and as a consequence all this is wrong. Okay, this is something more complex. It's a zigzag, and probably it's a double zigzag, yeah, where we have A, 1, 2, 3, 4, 5, B, we have, for example, A, B, 1, 2, 3, 4, 5, C. And this pattern, yes, is correct. Yeah, exactly. It's like a flag. So Mark is saying this is the wave 2 in this case before was it's like a flag. Yeah, it's like a flag, but it's very important here. Elliott was very clear. Triangles. Yeah, if you want a valid triangle, a valid flag, need to have 5 internal waves. Okay. In your current slide, 1, 3, and 5 is downtrending, right? No, they are not downtrending. This the use cat graphic, they are moving upwards. Okay, 1, 2, 3, 4, 5. Okay, good. Yeah, it's important you make this question. No, Kabir, this wave 3 is not shorter than wave 5. Yeah, if you measure this, the length of the wave 3, and you can check it with the use cat, and you check the length of the wave 5 monthly time frame. It's very easy to find. Is shorter. Wave 5 is shorter than all the other waves, and this is perfectly applicable to downtrend. Pretty nice. Yes, exactly, because the same happened here, and that's why when I asked how many internal waves we can find in this segment, the reason is the answer is 5, and the reason is because of that, because the main trend in the wave 4 is a downtrend, and all the waves that move in the same direction of the trend are subdivided into 5 waves based on Elliott. 5 waves. So if that is the case, in this fractal we should be seeing 5, 3, 5. Okay, we will see it in the next slides also. Okay, but this is clear, no? The 4 rules. What happened with those corrective waves as we were seeing before? What time frames? Sorry, Alejandro is asking what time frames are the rules oriented. So think that Elliott made all this study manually, okay, with a daily graphic of the Dow Jones. I don't know if he really used intraday graphics, but everything was manual. Now we have the power of moving in different time frames, even at the second. Okay, as we are talking about fractals, Alejandro, this is applicable to any kind of time frame. Okay, but if I tell you that and I tell you this, no, it's not true. This is not applicable to all the time frames, because here what we are doing, what we are studying is a concept, okay? The first concept of fractal. We will see later that this is not happening practically never, okay? We won't see 5 waves. It's very difficult to see patterns built with 5 waves. So that's why if you want to see 5 waves in a 5-minute chart, is very difficult. In one minute chart is very difficult. Okay, the higher the time frame, maybe you are able to see this more often, but really it's not happening practically. Yeah, the market moves in a different sequence, but what I really like about the Elliott Wave principle is the concept. And if you understand the concept, then you are able to apply what we will see later. Okay, But as I say, Alejandro, this should be applicable to any kind of time frame because we're talking about a fractal. But really, this pattern 5-3 is not happening. Yeah, and that's something that we will show later. Vale, perfecto, es español, Spanish in Switzerland, no, Ale? Okay, so we were saying then that the corrective waves are moving in the different direction, the opposite direction of the main trend, are subdivided into 3 waves. And for those 3 waves, we have 2 waves that move in the same direction of the correction, that are A and C. For that instance, then waves A and C can be subdivided into 5 waves. And wave B, that is moving upward in the opposite direction of the correction, then is subdivided into 3. And that is simply because if we want to see progress in that trend, yes, the correction always needs to be shorter than the prior wave. And the prior wave that is moving in the direction of trend needs to be bigger. So that makes that A at 5 waves, yes, and B at only 3. And doing that, what Elliott thought is, okay, if I have one structure of 5 and the other 3, I will create progress, okay, using that advantage of having 5 waves. Yeah, that was his idea. And with these two, we complete what is called a market cycle. Okay, so we have here the pattern, the motor wave, yeah, plus the corrective waves. 1, 2, 3, 4, 5, and ABC. 1, 2, 3, 4, 5, and ABC. And if we zoom in and zoom out, we will always see the same. Yeah. So again, if I look at this, I will see 5 waves. If I look at this, I will see 3 waves. If I look at this, I will see 5 waves because it's moving in the direction of wave 4. If I see here, I will see 5 waves. If I see here, I will see 3 waves, and so on. Okay? And this is where the magic of the Elliott Wave principle starts. He connects this fractal model with the Fibonacci sequence. And that, I think, is the biggest gain that you can get from Elliott Wave principle. That he knew how to connect not only the length, he thought how to connect the cycles. And he built up the cycles based on the Fibonacci sequence. 3, 5, 8, 13, 21, 34, 55, 89, and 144. Okay, and with this amount of waves that are building up a bigger, higher degree patterns, okay, he got what is called a cycle of the market that is built by 144 waves. Okay, and this is quite subjective if we want to be really certain in the degree of the wave. It's more complex, but it's really not as much. It's not really important at all to control this. What you need to understand is you have different degrees of waves, and the same fractal will build up higher degree scale waves. Okay, and if you zoom in, you will see again the same pattern all the time. But this is quite important because this is really happening. Yeah, these numbers are really into the fluctuation of financial markets and also in the nature. So that's why you need to know this sequence very, very well, because it will help you to analyze the market in a more accurate way. Okay, 3, 5, 8, 13, 21, 34, 55, 89, and 144. Okay, this is very, very nice to see. And here we have accounting, for example, for this is a pound dollar in a monthly time frame, and we can identify again 5 waves, advance, corrective sequence, and simple structure. So if I will mark the waves here. Minimum, maximum. We have this break into 5 waves. Then we have a corrective sequence, minimum here, another 3 waves. And then we have another maximum here, and the structure is quite simple, if we see, but this is the third wave. And we call this pattern 8VC, because if we look internally, yeah, we should be seeing then 5, 3, and 5. Okay, and then if we go to the corrective phase, we have 1, 2, and a very long third wave, and then we have 1, 2, and we don't know what happened here. And this is important part, because when we will see mainly all this time incomplete patterns, and we will invest based on the incomplete patterns. We will not invest on this piece, because this piece already happened. Yeah, can give you some clue or will help you to see what are the next iterations in the fractal, but really you won't invest based on this. You will invest based on the possible patterns that will happen in the future. Okay, that's why, yeah, when we see Elliott Wave analysis, it's nice to see, okay, yeah, we can identify 5, 1, 2, 3, 4, 5, 6, 7, 8, 9 waves. Okay, this is correct, so we can say that it's 1, 2, 3, and a complex fifth wave. It's okay. Then we can identify 3, maybe here, 1, 2, 3, and this is quite simple structure. Maybe we can say this 1, 2, 3, 4, 5. Okay, but this pattern is done. Yeah, this is important to understand. Yeah, it's better to identify the minimum and the maximum before labeling, and then just identify waves, because there is one point really that what happened internally will help you so much in the decision-making process. Okay, because what you want to do in an incomplete pattern, if you identify a minimum and a maximum, yes, let's go to call this wave W. Yeah, we'll see later this, and we see a bounce here, and we can say, okay, this is the corrective wave, this will be wave X, and I would need to make a decision based on this. So if the market will continue with the progress, so I know that the movement cannot continue downward. That means if I need to place a stop loss, I will place a stop loss in the minimum of the prior motor wave, or what I consider this motor wave, that is obvious. So the first point is to say, okay, in any position I will take, in this case, we think that the market is moving upward, so I need to set the stop in the minimum of the prior wave. Why? Because if it breaks, won't be advanced. Perfect. And then you can decide where to enter. You can enter with in a retracement area, okay, or you can enter when a level is broken. Yeah, so imagine that we say I want to enter in a specific level, this level, yeah, based on the studies that you have. And you say if this level is broken, then we will have this movement and we will complete 3 waves, and this will be Y. Well, this can be 1, 2, and 3, or this can be A, B, or C. Okay, so doesn't matter in one point how do you want to label. You want to identify a sequence of 3, because you will enter here, you will place your stop here, and you will take probably your profit in a specific area based on a projection of the prior motor wave. Okay, that's why it's an advice. Don't get crazy trying to find out the internal structure of the wave. Just place yourself in the time frame that you want to invest, and then identify minimum and maximum to locate the different kind of waves. Samiak is asking, okay, where he can find all the slides. The slides you can find it. You need to send me an email to info@thefinancialforecast.com, and I will send you the PDF with all the slides. Okay, is clear the concept until here? Okay, so then we will move to what are corrective waves. Okay, and we are almost an hour, so we will go try to go faster with this. So we can identify three different kind of corrective waves: the zigzags, the flats, and the triangles. Yeah, all these three happen in the market. Yeah, these corrections are true, but the internal structure don't get crazy about it, because it was like Alejandro was asking, we can identify all this structure if we go into lower degree, lower time frame. No, you won't see that all the time. Yeah, because the structure is different. But yeah, you will see the big picture. Okay, a zigzag is formed by three waves, as we saw before, the ABC. Yeah, always try to think in simple structures, okay, not in the complexity inside within each wave, because that will make your analysis more complex and more difficult. The email pretty is info@thefinancialforecast.com. I will write it here, info@thefinancialforecast.com. Okay, that's the email. Yeah, you can ask for the PDF after the webinar. Okay, so that is a zigzag, and then we will have a flat. What happened with the? We will go to that later. The flat is when we see a sideways movement. Yeah, we have mainly three waves, and all of them move in the same range. No, I cannot attach the PDF here. Sorry, you need to send me an email. Yeah, and this is a flat. Yeah, and we have sideways market. This used to happen. Yeah, and if we talk about fractals and we talk about this kind of corrections, we are talking about anti-persistences. The anti-persistence is a specific kind of structure of vibration that what happens with the waves is they annulate to each other. And this is what happened in a flat wave. So if we analyze this as a fractal and we try to get the fractal dimension of this, fractal dimension will be quite high. For example, 1.8. Why? Because it covers more surface. Yeah, the movement is more chaotic. Yeah, and for that instance, yeah, the fractal dimension is higher. Yeah, that is a flat. And then we have the triangles that also happen. Yeah, especially when we need to get some time. Time is key in all the sequence, the fractal sequence that build the financial markets. And this is also true. Triangles are mainly built with 5 internal waves, okay? Not 3, not 2, no. 5 need to have at least 5 waves, and can be in different waves: contractive, descending, ascending, symmetric, that is the most common one, and expansive is really weird to see. So this is a structure that you need to forget about this and always work with these three. Okay, why? Because expansive structures can be quite confusing and can just take you to the wrong decision making process. Okay, so everything that is this expansive, or if you know about the 5 truncate, 1, 2, 3, 4, 5, the fifth wave doesn't create a new high, so this is not true. This cannot happen. Okay, so forget about this kind of structures that appear in the principle but really are not applicable. Okay, good. And then we will talk about, and this is very important, is how we apply the Fibonacci sequence into the length relationship. Yeah, and we will have the retracements, and then we will have the expansions. Okay, and this image is super important, and this happens most of the time. Okay, so we have a specific area to retrace for the corrections. Yes, they correct to the 0.382, 0.618. Okay, everybody knows this, and then they extend to the 0.618, to the 1, or maybe it extends to 1.5, 1.6, and so on. Okay, but these relationships are the relationships that most happen in the sequences. Okay, very important. You need to remember all the time these numbers, and always project or retrace using minimum and maximum. Never use another point. Yeah. So for this case, for the wave W, we take the minimum, we take the maximum, and we calculate the retracement. And if we want to project the wave W to see what are the target area for wave E, we need to take the end of the wave X, and we take the length of wave W, and we project that length into the end of wave X. And that's the right way to get this. Rob is asking, how do you recognize a triangle from a diagonal? Because diagonals used to happen at the exhaustions. Yeah, when the market is finishing, okay, you will have this ending diagonals. Okay, but it's not a triangle because you are creating maximum or minimum. Okay, so I will show this to Rob, and then we will see what really is happening in the market. So then you have a triangle. Most of the triangles are symmetric. 1, 2, 3, 4, 5. Okay, this is a triangle. And ending diagonal. 1, 2, 3, 4, 5. You are creating new highs. You are creating new lows. You are moving, yeah, but not really in a big way. There is an ending diagonal. And within a triangle, you are not creating new highs or new lows. Okay, even if the triangle is contractive. Yeah, that's the biggest difference. Okay, then we saw Elliott, we saw the model of 5-3, but that really is not happening in the market. So at this point, what I wanted to show you is the concept of a fractal that really happened in the market, because markets are a fractal. But forget about now the 5-3, because 5-3 doesn't happen. Okay, and 5-3 won't help you to make investment decisions, the right investment decisions. Okay, so we forget about that, and the market really moved at this way. The market moves really in 3 movements. Yeah, most of the time is this pattern, and this pattern iterates, yeah, in a different ways, because we have more than one pattern always, but always is built up of 3 internal movements. Okay, and we can combine this, and we can put 3 times, 4 times, 2 times, but always we will see sequence of 3 movements. Yeah, this is what really happened in the market. And how this fractal is built. So here you will understand the process of this behavior. If we want to create the fractal of the financial market, this is a process that Manuel did also, and get very nice replicas of it. You start with an initiator. Initiator is a very simple form that in this case is a straight line. So the fractal starts with that. We have that line, and then we break that line into 3 segments. Yes, and we create the zigzag movement: upward, downward, upward. Okay, if we want to define the fractal dimension of this sequence, yeah, you will find it applying this formula. Okay, that is the length of each segment and the length of the waves, okay, in this case. And the fractal dimension of this pattern, this row, yeah, with this measure is 1.36 or 38. And with this we can get the horse exponent, okay? But this is the fractal that iterates in financial markets. So we have this, and then we say, okay, I will iterate this continuously, infinite times, in different directions, moving upward, moving downward, to create and replicate a financial market. And we create this. We iterate all the time this pattern, 3 movements, okay? And we get this. Until here is easy. If this always happens in the market, then it's easy to forecast, it's easy to invest, because we know that always will be a simple pattern, only based on the length. And that is where the complexity enters. Yeah, we know that the market moves now in 3. And if you start analyzing the market and you forget about the Elliott Wave and you start identifying sequence of 3, will be much more easy for you, and you will identify easily the different patterns. And those 3 will create higher degree patterns, okay, again of 3. That's fine, and it will be much more easier for you. But something happened. It's not so easy. And this attached to a question I had at the beginning about if the B wave and the C wave can be in the same candle. And here's where I say no. Marco need to leave. I have to leave the webinar. Will last an hour. I will send you new. Okay, yeah. Please, Marco, send me an email, and tomorrow you will have access to the recording. Yeah, so tomorrow you will see what you couldn't see today. Yeah, and I will send you the PDF. Yeah, and yeah, enjoy Amsterdam. You also, great city. Thank you, Marco. So, and this is the key element, the time. Yeah, and here's where everybody has a lack of knowledge, because most of the people analyzing financial markets are not taking into consideration the time. And we know that some waves can happen faster and some waves can happen slowly, yeah, and get a long time to get the wave finished. And then when we stop talking about the unifractal that happened here, because we are talking about only on the length, and here we talk about the multifractal because it involves also time. Okay, and this is very important. All the waves in these 3 wave structures that build the financial markets are connected in length, we know that, with the Fibonacci sequence, in time, and also in speed. These 3 elements, yeah, connect these waves. Okay, and this can create a different kind of pattern. We can have many patterns. Okay, all of them iterating the length, the time, and the speed. Yeah, and I will share with you 3 different patterns that happen mostly in the financial markets. Okay, so let's move then. The first pattern 1, you will find more patterns in the book also. We identify the first wave W, call it as you wish, first wave. Then we have a correction that happened in the area of 0.382 and 0.5. Yeah, here the corrective wave finish. Then the chances for the next wave to the upside to reach this area 0.5, 0.618 are really high. To reach the area of 1 are lower. Okay, so we know that this pattern is a high probability pattern. If we have a motor wave, we have a corrective wave ending in this area, and we break certain level of the corrective wave, then there's one point that the chances to that event to happen are really high. Okay, and we will achieve this area. This is the pattern number 1. Yeah, and you need to identify this pattern partially. You need only 2 waves to identify this pattern: wave W, wave X, and a specific area of retracement. Okay, super important. And of course, if you want to be more sure, because the chances of this pattern to be complete increase. Okay, how do you calculate the Learn Investing is asking, how do you calculate this value in investing.com? Can you show us? Yeah, it's very easy. So what you need to do in this case is, sorry, I lost the question. Is Learn Investing is just calculate the retracement area. The time, I cannot share that now. Yeah, because the time is the most complicated part. It's too complex, and not everybody knows how to treat the time. So there's something we will share with you. I will share with you probably in my next book, okay, but that will take a little time to show. Okay, but the time is a connection, and you can find some time specific connection, yes, some time areas in the forecast that we have in our website. Yeah, you will have there the time zone where the corrective wave should be finished ideally. Okay, so if you have the minimum happening in a retracement area in a specific time area, then even the chances to see a bounce upward are higher. Okay, and this happening are higher, and this reduces drastically the chance for you to lose in that investment. Yeah, that's why this is so important. Okay, then the second pattern that is this one. The retracement happened in the area of 0.5, 0.618. So then the chances to see the next wave in this area, 0.8541236, are really high. It won't stop in the 0.618 area. It will continue to this area that we call attractor, okay? So this is the second pattern. And with these two patterns, pattern 1 and pattern 2, you can start just analyzing your instruments and getting a lot of discovery with these two, and connecting these two to create higher degree waves as this one. That is a combination, okay? Here is like moving from a 30-minute chart to a 4-hour chart, okay? In the 30-minute chart, we will see these small waves, and if we move to the 4-hour chart, we will see the higher degree waves, okay? And this is a combination of the pattern 1 and 2. And you can combine those, and those are the ones that mainly happen in the financial markets, okay? Now it's on your own to start analyzing and finding this that I'm sharing with you. And I will show you some examples now. So this is a Dow Jones. We have a first wave, W, we call it W, then we have X, a corrective wave. And based on the retracement, this is perfectly well connected in time and length and speed. We have the chances to first achieve the blue area, the attractor, first attractor, and then reach the second one. And here I put labels so for you to see labels, but it's not necessary you put labels. You need to identify the waves, and you need to identify the main trend, okay? In the forecast that we offer for free, you have the dashboard, you have the main trend, okay? Already studied. So if we see this, and the price stays above 26,550, then we need to reach this first area or this second area. What happened? This, we reach the first area on time, then we have another correction, we didn't break this area, and then if we see, we reach the second area later than expected, but we will reach this area. So that means that if we could buy at this point, we would take profit or here or here. Yeah, only just focusing in sequence of 3. And if we want to analyze how the market, this sequence is breaking up, is 1, 2, 3. Okay, here we have 1, 2, 3, and then we have 1, 2, 3. This makes a bigger correction, and another way more simple. Yeah. And if we go here, we have the maximum here, 1, 2, again 3. If we go here internally, 1, 2, 3, connector X, 1, 2, 3. That's why I'm telling you the market doesn't move in 5, 3. The market moves all the time in 3. 3, 3, 3, 3 of different length, okay? Then next example. This one, this is for the pound dollar daily. We have an overall trend. This is our dashboard that is telling you the trend. In this case, the trend is a downward trend. And we have this sequence already started, 3-wave sequence. And we expect the price reach this area and this area. This is a daily chart. If you analyze the daily, then you can go to a lower time frame, for example, 4 hours, 1 hour, 30 minutes, and you can invest in that time frame because you know that in the long term, the price action based on the trend, that is downward trend, will achieve this area, will achieve this area. Okay? So you know the direction you need to invest. And you know now that the market always moves in 3 waves. What happened after this? We reach the attractor. Okay? We reach the area. Yeah, and then prices just bounce up. Good. Another example here. Here the price is trapped in something that I call non-trend area, that is within these two levels. And this happens mainly when we have a corrective sequence. Okay, so based on the trend analyzed, we have an overall trend to the downside. So we have more chances to break this level and reach any of these attractors. Okay, so what happened here? We have one, we have a corrective wave, we have a maximum in this area. This is the ideal time where the corrective wave should be finishing. And then we have a movement, yeah, reaction downward. So let's go to sell in this area to reach this. There's a way you need to analyze, so you can make a decision with this. What happened after? The market just moved downward and reach the second level. Okay, and you can see here that you don't need the 5-3 because you won't see that in the market. You need to use all the time 3, a sequence 3, pattern of 3, mainly based on the pattern 1 and pattern 2 that I shared today with you, and you have many examples of how this is happening. Okay, different instruments, different sequences with the trend next to it, so you can see how the market behaves, yeah, and what to expect. Yeah, this is all the time the same. The market move in 3 patterns of 3 and always move from blue area to blue area. That's something we call attractor. Okay, all the time we will see the price bouncing between this blue area and maybe then blue area, and we will generating different blue areas, okay, based on the highest probable iterations. Okay, yeah, all the time 3, 3, 3, and moving in between these blue areas. Okay, is this clear? So we have one question. In this chart of the pound dollar, the top of the third wave and the top of the corrective wave are equal. Okay, let me just go back. Emmanuel. Learn investing, you can send me the request. You want to see 1, 2, 3 waves in the Nifty or 5? Please send me the question to the email and I will share that with you. Yeah, no problem by that. The pound dollar. This is X, pound dollar. Okay, so the question is from Emmanuel, the top of the third wave. I don't see a third wave. When you identify, Emmanuel, is on the top of the wave 5 is a peak head. Okay, so this is, if we break this into waves, what you can do, Emmanuel, is send me an email, I send you this, the PDF. You can label in this PDF and you can send me this back, this image back. So I understand what you are saying. If we identify the sequence here, you have a simple zigzag, a correction, and a complex zigzag. This is a pattern of 3, 1, 2, 3. Yeah, here it ends. Then we have a reaction downward, and this is a new pattern because it starts a new sequence. Yeah, and then we have 2, and then we have the third wave. But here you don't have a fifth wave. Yeah, if you want to label this as 1, 2, 3, 4, and 5, you will make a mistake because you will be expecting to see new highs. Okay, and that didn't happen. That's why this rule of 5-3 won't help you to be profitable in financial markets at all. Yeah, it's nice to see the labels in 1, 2, 3, 4, 5 ABC, but really it's not applicable to financial markets. Yeah. Okay, good. So we have more questions. How do you use Bollinger Bands for Elliott Wave? That's Bollinger Bands is a really nice and good tool. Kabir, I cannot, sorry, Vishal, I cannot share that with you because of the time issue, but please send me an email. And you have in the educational part of our website something called onboarding that is for free, and then you have an explanation of how Bollinger Bands works in a video. Yeah, but just reach me out and I can help you with that. So Kabir is asking, is all the time 3, 3, 3, 3? Yeah, of course, it's all the time combination of 3, Kabir. Maybe you can have 5 sequence, 5 waves, but in the combination of 3. Yeah, always 3. Okay, so and then with everything that we saw today, what we did is just we took all the rules and more rules plus fractal analysis. So the artificial intelligence, what it's doing is analyze the instrument and apply all this concept that we saw today, plus another concept that I didn't share today, but it's fractal analysis and more complex. So you're welcome, Michal. What happened? What is the result of that, of what I show you today? This, okay? Now it's working, the artificial intelligence is working with Forex. Now we have 4 live pairs that are the pound, the dollar yen, the euro dollar, and the Kiwi dollar, and we have the Aussie and the US CAD, all the measures in test mode, but they will be live next month. Next month. What happened with this? That is extremely profitable. Okay, we have in the lapse of 1 year a profit of 31.7%, and in the case of the pound, applying this rule is 100% right. Okay, 42 wins against 0 losses. Yeah, and we are talking about a time lapse of 1 year. Okay, of course, this model is applied. We have the long-term model applied in the long term, so we see that this is really feasible, and of course continue projecting the same. Yeah, but here I'm showing only 1 year. If you want 2 years, I can show that with you also 2 or 3 years. Okay, then for the dollar yen we have 42% profit, but 94%, 95 practically percent of the time is right and 5% is wrong. 12 wins against 1 loss. Okay, again the same. Yeah, applying this concept that we saw before. The Kiwi and the euro dollar, again the same. 91% profit positions, 97% in the euro. Okay, those is really good, this system that I share with you, these concepts, when you apply this. And this artificial intelligence is using part of this, another piece, but it's working quite well. I have a question from Preti. What about the stocks which hit circuit? I don't know what do you mean with circuit. Can apply Elliott Wave? Yes, you can apply Elliott Wave to anything, but be careful, because we just said that Elliott Wave, that model of Elliott Wave 5.3 is not applicable. Okay, so you have some concept really strong in Elliott Wave that can help you to understand the market behavior, but you need to focus on pattern of 3 all the time. That Elliott also saw those patterns. Yeah, so you need to focus on that. With Elliott, can we identify till which high it can go? Yes, what you need to do with that is using the projections. Yeah, all the Fibonacci sequence is the one that will tell you the areas, different areas where the price can be rejected, yeah, or change the trend. Okay, so this is the way that the artificial intelligence works. Yeah, and we have the other 2 pairs, the Aussie and the US CAD, that we are testing, but they are working quite well. Kabil, we don't sell the artificial intelligence, but you can join the artificial intelligence. Yeah, so and it's very easy. You need to just to open an account. The account is for you, and you authorize us connecting all the artificial intelligence to your account. Yeah, and at the moment that happens, you will have the replication from the master account to your account. Yeah, but the account is always yours. You can dispose of your money anytime you wish. You can do the withdrawals you want. You can do deposit you want, and the only thing that we charge is a performance fee. That means if the artificial intelligence can give you profit, we will get a part of it. Yeah, depending of the size account, we get 30 or 20%. If the profit is 0, we will get 0. Okay, but only based on that. No, the artificial intelligence only works now with these Forex pairs. Yeah, and then we will extend and we will create a different kind of bumblebee for shares and for commodities. Yeah, but now we are using the 6 majors. Yeah, pound dollar, euro dollar, dollar yen, Kiwi dollar, Aussie dollar, and US CAD. Okay, we work with this only. But the most important is that it's working very in a profitable way. yeah, despite what is the instrument that you want to continue investing on and you want to analyze, you can continue doing that for your side, but you know that this way you have a saving account that has a higher return. The fee is a monthly fee. Payment is asking, yeah, it says if you have an account lower than 25k euros, the fee is 30% over profit, applying the watermark system. So that means that we always charge the fee if your account is growing. If your account is not growing, then we won't get any fee. Yeah, just to be transparent, really, and tell you, okay, if this works, it will give a benefit to us. If not, we won't get any pen from it. Yeah, but you can see it's working perfectly fine. Yeah, we are very happy with the results that we got with this artificial intelligence. Okay, so if you want, will you reduce the loss from the fees? No, really, now we are not registering losses. Yeah, the losses are too small, and that used to happen when the operation, the transaction get closed. Yeah, but no, we don't reduce fees. But the watermark system Kabir is this way. So you have an account here, for example, with 3,000 euros. Okay, I write here 3,000. And then the first month you gain 500. Yeah, but the month after, so here we get the fee. The month after, something happened, went wrong, that happened, and you lost 1,000 euros. So you are in 2,500. Okay, the next month it earned 200. Yeah, so you are into 700 in this month. Here, despite you had a profit, we won't charge fee. We only will charge fee at the moment that you break the watermark and 3,500. Okay, and the next month you do this, and then we charge a fee for this profit. Yeah, not for this. That is the most transparent way to charge the fees. Yeah, the fee maximum is 30% of the profit. Yeah, if you have an account lower than 25k, and 20% is higher than 25k. Yeah, so everything is quite transparent in everything, in all the way that we work. So we are finishing with this. So all the points that I couldn't cover, and you have more questions, you want to share analysis, you want the PDF that we saw today, send me an email to info@thefinancialforecast.com, that email that you see here, and I will give you an answer within this week and next week. Okay, so information, PDF, questions, anything that you need, just reach me out and I will help you really with that. Okay, if you want to see tomorrow the recording of the webinar, what you need to do is go to the website, thefinancialforecast.com, go to blog, and in blog you will have the first one. The first blog will be the webinar from today. If you want to see the forecast, they are for free. You have 5 main instruments. Okay, you need to log in free forecast, free, and you will get access to the members area. You can go to instruments. You have videos on how to read the charts and how to read the dashboard. Okay, and then for example, you can go here to Forex and you want to know the euro daily. You click here and you have the chart plus the dashboard, and you can maximize the graphic, and you can see here the sequence already marked. Yes, where to expect the correction if the correction happened. Yeah, and all the stuff. So very easy and nice for you if you want to compare with the analysis that you have. This will help you a lot all the time, the comparisons. Yeah, if you want to share some analysis with Elliott, just send me the email with the counting and I will give you feedback regarding that. Okay, and thanks a lot for the time. I hope this will be helpful or would be helpful for you. And yeah, so start labeling and analyzing the market, and always now stop thinking about 5-3 and start thinking about 3-3. Okay, have a nice week. Thank you for all, and I wait your emails. Okay, thank you. Have a nice day. Bye.